First of all, I would like to welcome this distinguished panel that is going to discuss today the cross-border payments at the Crossroad. Is there a chance for mid-tier banks to remain competitive? So, and if we start with the ladies, we have Lauren Langbridge and Ben Ellis and Akshat. And you're representing three different exciting organizations to cover this topic. Lauren you will have an opportunity to introduce yourself, but Lauren is representing the infrastructure part, representing WISE. Ben is also representing the infrastructure provider part, representing Visa, and then we have Akshat representing the incumbent alternatives, so representing HSBC. Warm welcome. Thank you for coming. Now, the intro of this topic is that there is a tremendous change in the cross-border industry today. There is a regulatory pace. The competitive landscape is changing fundamentally. ERP providers are coming in, changing their position. We also have the fintechs coming in. And as Todd talked about earlier with the uneven regulatory environment, etc. Looking at the retail part of the cross-border payment business, the fintechs have been carving out over the last 10, 15 years 57% of the cross-border retail market from the incumbents. This is something that has happened gradually and then suddenly. Now, looking at the B2B payments that are also then connected to a much bigger ancillary business in the transaction banking industry, such as the trade side, interest net, FX business, etc. The fintech industry is now aiming towards taking a bigger part of that business as well, as we all know. At the same time, the global banks are also becoming bigger, both in terms of expanding their proposition to corporates, but also in offering propositions to mid-tier banks. So we also have a poll question. I would like to hold that poll question a little bit. Let's just start with a warm-up. Some warm-up questions. So Ben, Visa has been in the payment business for 60 years and have a long legacy of providing innovations in the payment business, but predominantly the card business. Now, listening to my kind of framing of this session, tell me a little bit about how you see that, how Visa is going to provide value into this new environment.
Well, thank you, Patrick, and thanks for being here. It's great to be here. It's great to see everyone again. It's my third, fourth BAFT, and every time it's great to see folks. I think from the question you asked.
Before you ask,
yes.
Before you answer the question, please introduce yourself a bit as well.
So Ben Ellis, I lead B2B Connect for Visa. B2B Connect is part of the broader Visa Direct offering, which focuses very much on cross-border payments, very much on payments that aren't the traditional consumer going to a merchant and making a payment. And it's one of the core areas within commercial and money movement solutions, which is one of the three pillars of Visa's business. And it's an area where we're focused tremendously on taking what we've learned from the card side and applying it to this new part of the business, based in San Francisco. So thank you for that reminder. I think when you think about Visa and the card side, there's a lot of things that work really, really well about that model. And Ather and Stephanie earlier talked about, a few of those things that have helped it. And we're continuing, along with others in the industry, to push and to innovate in terms of more flexible economics, in terms of streamlined acceptance, in terms of thinking about ways in which to expand how those products have traditionally been used. But we also know that there are limits, right? And there's other things that can be done. So what we've done is we've taken a lot of the structural support for what's made that work in terms of standards and rules, in terms of technology, and in terms of working in partnership with financial institutions around the world, and said, how can we take that basis and apply it to cross-border payments? And so taking a similar multilateral approach, a similar rules, technology, partnership-based approach, and how do we work really in the next frontier of international payments, cross-border payments, to streamline, to have efficiencies, to open up payments. And I think one of the topics here, mid-tier banks and remaining competitive, one of the biggest challenges we hear from everyone we talk to is the cost of technology, the cost of keeping up, the cost of maintaining the capabilities. And one of the things I think that an infrastructure player, like a Visa or others can do as well, is help invest in that underlying technology and capabilities, one time, right? So that banks don't have to individually invest and spend all that funds individually. It's, if there's the one thing I've never heard say, it's a banker who says, I just have so many tech resources, I don't know what to do with them. Do you have any good projects for me? I've never heard that said once. And so it's a real challenge for the industry, and one that I think that applying the model that we've historically applied in this context can help with quite a bit.
Good. Thank you. Also a part of my introduction should have been that a lot of the initiatives, there are a lot of bank-led initiatives in the marketplace or regional initiatives trying to connect ACH, local ACH, and thereby creating then a global payment solution. From my perspective, coming back then also to B2B payments, we know that 80% of all global trade is invoiced in dollars. There should also be, in my view, a limitation probably also to what's being possible in connecting local ACH as the trading currency is predominantly dollar. Akshat, tell me a little bit about your view. How do you view this interoperability connecting?
Thanks for that, Patrick. And again, big privilege to be here at BAFT. It's always a pleasure to meet everyone here and to have this distinguished panel.
And please introduce yourself as well.
So Akshat Saharia, I look after payment solutions for financial institutions, so banks, but also including NBFIs and fintechs for HSBC in Europe. So basically our sterling clearing, euro clearing business and treasury solutions. This is basically correspondent banking, so the old method of processing payments, which we're working on. It's something that we've invested a lot in, and we've seen a great amount of improvement on that. And we're continuing to build on that momentum of the change that we're seeing in the industry. So coming to your question on interoperability and interconnectivity of clearing schemes, I think it's a great vision. I think it does help, when schemes start working together, you can see payments moving faster. You can see potential costs down because these are ACH schemes and RTP schemes in a lot of cases. So I think it is a really good concept, but it has somehow failed to actually really take off. I mean, we have lots of examples where it didn't work, but there is hope from projects like Project Nexus in Asia. Hopefully by next year, there'll be some movement there. But I think there's no issue with technology. It is more about the governance, the risk frameworks, and the operational alignments that really make it a really tough nut to crack, I think. I mean, the questions are, can central banks and scheme providers come up with a common set of rules? What happens if one of the institutions actually fails? Who takes the loss? Who agrees that certain organizations, certain institutions can be part of the scheme? Who manages FX, liquidity? The list is pretty long. So the question really comes is, do we need to make it that complex? Or can we rely on something that works, maybe enhance it, and it works? So correspondent banking model obviously has been there for a very long time, and coming from a banker, probably not very convincing, but it works. If you just take the stats, and I'm talking SWIFT statistics, SWIFT processes about 45 to 50 million transactions a day. HSBC is one of the largest users of it. We are probably the second or third, depending on the stat we're looking at. 98% of our traffic is actually completed within a day. 60 to 80% of our traffic, depending on the site, the branch, the affiliate, is actually processed within an hour. And a large chunk of them are actually processed within minutes. So a huge volume of payments are actually getting processed quite quickly. So that, for me, what excites me is there's a lot of changes that are coming in the industry which will actually even further improve this. I mean, the first game changer for me is the ISO 20022. That is true interoperability. By the end of 2025, all banks will be talking to each other in that language, which is a structured language. Not just that, the biggest currency clearing centers, the RTGS schemes for US dollar, euro, sterling, Hong Kong dollars, Aussie, you name it, 80% of the flows will actually complete in an ISO based scheme. So a lot of friction that used to be there in the payments is actually going to go away. The second big change for me is the advent of the real-time payment schemes. There are about 80 of them across the globe now. But the big that changes the game is RTP schemes that allow cross-border payments. So, for example, the UK fast payment scheme, it opened up in 2008, but it allowed payments from outside of UK to complete in the UK. There are other schemes in Hong Kong, Australia, India. Europe has the OCT INS that's coming up. Then maybe potentially next year we'll have the US RTP also open up. So a majority of the currencies, again, will potentially be processed over an RTP scheme that allows cross-border. So between ISO and the schemes opening up, I think it will further diminish that, the hours and the days down to minutes and seconds. So for me, that's the biggest change that's coming, and I think that's where we're going.
Thank you. I think it's super interesting. I mean, talking about the cross-border payment, I mean, customer experience is clearly something that is being sought after. Todd mentioned the G20, the Financial Stability Board, the ambition, the 5-year ambition, or 6-year. No, it's a 2027 ambition now, with cheaper, faster, higher transparency and better accessibility. I mean, I've been in transaction banking my whole career. ISO 20022, I heard for the first time 21 years ago.
Yes.
It's being implemented now. At the same time, the industry is changing fast. The question is, can mid-tier banks wait for things to happen? Because it's happening, the change is happening now. So Lauren, tell me, how do you see this change? And please present yourself and tell us a little bit how WISE is going about this and how you see that you are providing value into this space.
So Lauren Langbridge, Commercial Director for WISE Platform for the Americas. So for those that don't know WISE Platform, we're essentially the infrastructure arm of wise.com. where we take the technology that powers Wise.com and expose that through a suite of APIs for banks and fintechs to essentially replicate that send, receive, hold, and money management capabilities that you see on Wise.com and make that native within their platform to provide that experience to their end customers. And I think, as Ben was saying, you're noticing that, like, why do banks need to try and build this themselves? There are infrastructure providers that already exist out there, like a Wise platform, that can essentially do that heavy lifting to make access to domestic rails, whether that be through direct connection or through local schemes, through one single API. And I think that for mid-tier banks specifically, they're having to keep up with these fintech providers. And to your point, consumers now have a level of expectation as to what they want from a bank, where fintechs are like building these super apps, where speed, cost, transparency all come into play. And that's the level of service that they expect. But it's hard for a bank to keep up with that level of innovation, you know, for them to be able to not just win these customers back, but to retain them and acquire new customers. There's a huge opportunity for them to partner with infrastructure providers to allow them to create that user experience within the mid-tier bank. And it's hard for them to do it. Like, I think that it's not a case of just like at that initial build, to Ben's point, you know, have they got all this developer resource to go and build it? And it's not just about building it, it's then managing it, and then it's maintaining it, and it's keeping up with the instant delivery of payments. You know, 65% of our payments deliver real time. We've seen that if a customer's payment takes more than an hour, within 15 minutes, they're already, you know, reaching out, where's my payment? They want an update on the tracking. So by leveraging platform providers, actually banks can provide, it's all then about the user experience. It's not just about the connectivity and the access, but partners do all the heavy lifting from the operational side of things to the compliance side of things, as well as providing that global experience. So I think to come back to the question of, can mid-tier banks remain competitive? I think they can, absolutely, but I think it's going to be through leveraging partnerships that are available through infrastructure providers.
Thanks. Three interesting responses on the current environment that we are seeing. I encourage you to ask questions in the on Slido. We also have a poll question here for you. Could we please pull that poll question up? And this is was created by Alan, so you need to bear with me here. Many believe that interoperability between different payment networks, domestic and international, must be solved as a new bedrock for global commerce. Safe, sound, cost-effective, and inclusive. What do you believe is the main driver? So, do we see all the options here, really?
No. We need to scroll down for the other options.
This is funny. Yeah. There is a fourth alternative, but it's not.
I think it's probably available on this
on the Slido app. Yeah.
Okay. The fourth alternative, if I recall correctly, it's a little bit, yes. Oh, wow. Okay, so should we...
So it looks like it's the first answer that tends to be the one that folks are selecting the most. I think that probably doesn't surprise me. I think I would have been surprised if the stablecoin one had come up, only because I feel like I don't think the industry can wait for that. I think you know, we all have to move, and we all have to move forward, you know, faster and in a more coordinated way. I do think a big part of how to make this work for everyone in terms of driving the cost down, in terms of driving efficiencies up, in terms of keeping pace, in terms of keeping up with compliance and all the regulation comes. I think a big part of that is going to be on how a lot of the folks in this room and beyond work together and collaborate and reach that harmonization. I think the ISO 20022 is spot on, and that helping a lot. Although it is interesting, sometimes you look at some of the local RTPs that are on ISO 20022, and their ISO 20022 is a little different than the other one. I mean, the fields are all defined the same way, but how they're actually applied can be a little different, which is creating some challenges.
Absolutely, and that's what we saw with SEPA migration also, which took a long time. It was ISO 20022 from 2008, right? But it took a long time for it to be all harmonized. But that's what I think Swift has tried to do with the CBPR Plus model. They've kind of said this is the format you should use. So at least between banks and to some extent the RTGS schemes, they are trying to follow CBPR Plus, but there are certain that are not. They are thinking of adding new things like purpose of payment code and LEIs, for example, in the UK, which I don't think causes friction, but it does now make a bit of a difference between what Target 2 in the US, in Europe wants versus what CHAPS in the UK wants. So I think all the RTGSs and central banks should need to, should talk to each other a bit more on how to actually make it interoperable and more harmonized.
But will that happen now? I mean, we talk about should, and there is a timeline on all these things, and I just have a feeling that the change is happening quite rapidly. What actually needs to happen here and now, Lauren? What is your take on the Slido result here?
I think there's technology that exists today. It's tried, it's tested, and I think that the poll answers answers its own, like my response, but to leverage the existing technology that's there, I think is probably the best way forward.
And that is probably an obvious answer. However, I feel that there is this part of banking is very much interconnected with each other. It's markets, it's financial institutions, it's transaction banking, etc. That all have a say in this. What's your view? Why is this being slow? Why are banks not realizing the sense of urgency faster enough and able to move faster? Actually, you seem to be.
I have a view that I think the banks are looking at this.
Yep.
There is a lot of work that banks have been doing. So there are, for the G20 targets, there is speed, there is cost, there's access. So on speed, I kind of talked a bit about that. But there's more work to be done other than just the RTP schemes. There's a big part of the speed bit is the friction related to the compliance. I think that is something that has to be addressed, where we do need the central banks and the regulators kind of across the globe. So this is where I need the interoperability rather than the schemes interoperability, where all the regulators do need to have that common understanding of how should we do KYC, how should we do enhanced due diligence, your AML and sanction screening. If you can harmonize that, that for me is the biggest hurdle that really needs to address, and that will reduce down costs also. Because today, majority of my cost is obviously building infrastructure, but the second biggest cost, or sometimes even higher, is the cost of compliance. How do I make sure that I'm compliant with a certain, banks like HSBC are in 50 plus locations, so we have 50 plus regulators to comply with. So if that was harmonized, that will quite substantially reduce our costs, and that cost then can be given back to the clients. So for me, speed and the cost are kind of related in that sense,
Okay.
and really need to be addressed.
Anyone else that wants to comment?
I mean, I'd agree with much of what you said, and it ties in a little bit to one of the questions we're getting at the top about the the G20 mandates and what is the impact that they have. I think one of the challenges that we all work with every day is some of the requirements are at odds with each other, right? So on the one hand, it all has to be fast, frictionless, very easy to the end consumer, delivered at very low cost, and with perfect compliance and no mistakes and no fraud, right? And sometimes, the reason why the payment gets held is to make sure that you are delivering it to the right person or business or enterprise, or that it isn't a payment that needs to be looked at for compliance reasons or whatnot. And so I think there's a big part of it, which is how do you balance those two competing forces? I do think that technology has a place to help in this. Some of the earlier discussion was on AI. I think some of the AI tools that are coming out to do some of that initial screening, right? So that things that traditionally a level 1 analyst would have looked at and identified, and you need a lot of those people to do. It's not perfect, and you still need to have the right people in there to look at it. But a lot of that first order activity, you can actually do in an efficient way, catch things that you maybe wouldn't have caught before, and repurpose the people, the human intelligence, to the highest and best use.
Yeah, and that's a space where banks are investing quite a bit. AI has been in our industry for a very long time, right? So we've been doing AML and sanction screening using a lot of AI, but we have so much data now. With Swift GPI, we can extract the data and run models on it, which we can then give back to our customers through, we're building APIs, for example, where the clients can check, is this pre-validation, for example. We're working with Swift on that. We're working on providing tracking and tracing of where payments are. But we're also looking at fraud data as well that comes along with it to see how long a payment took, did it get stopped, was there any issue with it? So that data is being utilized.
But that is interesting what to say with Swift GPI. I mean, we all appreciate the Swift GPI and think it's a great innovation, but at the same time, it's putting the finger on the problem, that you basically need to put a GPS tracker on a payment to be able to find it in the spaghetti. And I mean, with the new modern requirements, is that what G20 is asking from the market in a way? I was just reflecting to what you say, but if we go into the questions here, I mean, you can pick a favorite question here, but one of the questions that I look at and was very much true when I was in the transaction banking part back in 2015 when this really exploded. Will we see more bank fintech partnerships for banks to remain competitive in the space? One of the problems was that the banks or fintechs, it was hard to scale, it was hard to get the compliance framework in place, etc. Has there been a change here the last 10 years? Will we see more fintechs per se coming in, providing value to mid-tier banks?
I mean, I would say yes. We're already seeing partnerships with Wise Platform with people like Standard Chartered, Morgan Stanley, Nubank. And to Akshat's point earlier around like compliance in region, these are essentially technology companies that have invested in the tech. They've also invested in building teams all around the world where they hold multiple licenses to actually take on the burden of compliance. So banks don't have to. Cross-border payments is hard. Swift, whilst it's great, it is slow. There is no guarantee that funds always deliver 100%, and actually that's why we want to help banks connect to the local domestic payment rails or direct to scheme, so that you have that guaranteed and full transparency of funds being delivered. So I think that, yes, we'll see far more of this coming in the future because it helps banks scale.
Yeah, and the one thing I'd add to that, and we've seen it in the last 10 years, there's been a market shift in terms of and I'd say it's been a shift on both sides. It's banks more willing to work with fintechs, but it's also fintechs realizing what they need to do to be bank scale in terms of security, in terms of reliability and whatnot. I think the one thing that, at least in our journey with a lot of the financial institutions we work with, that banks are getting better at, but recognize there's still room for improvement, is the onboarding process, right? So so there's a part of it which is genuine, which is if a bank is going to offer this to its clients, it has to have the right security, scalability, stability, all of those components. But then sometimes you see things and it seems like it might be process for process's sake, right, as opposed to really trying to understand it. And I think there's progress being made. I think there's yet more progress to come.
Patrick, there's a question that's been asked from me that I'm happy to address. The question is, Akshat agrees Swift excellent rails for low-value cross-border payments, but users would have to accept a reduction in fee charge to clients. So I'm assuming clients here are my mid-tier banks. So absolutely. The answer is you need to look at cross-border payment as a cross-border payment. How it gets settled is a secondary. You can have a cross-border payment settled over RTGS or an RTP. The difference in cost is really what's the cost of me processing over, for example, in the UK over CHAPS. That's about, that's close to about £1. Where a payment that gets processed over an RTP scheme like fast payments, the cost of processing is about 5p. So let's say a 95p difference in processing. But anything and everything around that, from sanction screening, AML monitoring, any repairs, any client servicing, costs are exactly the same. So the cost difference is potentially £1 or $1, right? So yes, there is a reduction in cost, but all the other things that are around it will be similar. We do need to understand the prices, the costs are compressing, but we need to agree with it, because if you keep the costs high, you will lose your clients. You do need to realize that if by reducing your costs and reducing your charges, you are going to keep some of your clients, otherwise they will go to fintechs. So it's a complex answer, but it is not a big difference in cost when it's being processed cross-border. But the direction of travel is that the fees will go down, yes, and we have to accept that.
Very good. So thank you. We are at the end. Lauren, just a short final remarks on your side. Is there anything you would like to say?
Yeah, I mean, this is my first time at BAFT, so it's a great experience, especially to be on the panel with Akshat and also Ben and yourself. But I'm excited for more partnerships to come in the fintech space. I think technology is evolving, and now's the right time for banks to look at partnering.
All right, good. Thanks a lot. Thank you all for coming and sharing your knowledge here. Thank you.
Thank you.